Good afternoon, fellow amateur gynecologists. How we doing? Okay, so I'm going to try to keep this short and sweet. This is something I think everyone should know about, and at least have a part of their financial wisdom arsenal in terms of facts. A lot of the time, I will preface my forecasts or my updates or whatever us line watchers do on Twitter or YouTube. I'll preface it with update forecast, and then but this is up to SPY, or it's up to IWM as to if we do that or not. And so many people will then turn around and be like, "Oh, you're gonna blame your stupid line watching on like SPY going down, dude. You're so fucking stupid, dude, line watcher." Oh, interesting. So this is the weekly chart of GameStop. I've programmed. I'm going to use fancy language here so some people can understand the magnitude that people like me and other brilliant minds go through to prove what we think and prove what we hypothesize. I've programmed an indicator, as in typing and testing and debugging and using my years of experience to do so. I've written an indicator that highlights whenever a benchmark security is going down relative to the one that you have pulled up. So I can change this to whatever color I want, whatever benchmark I want. In this case, I have XRT. It's the ETF with one of the heaviest weightings of GameStop inside it. I'll go to a different time frame. And anytime we go down, it's because, well, not because, but you can see that there are major indices that are going down. But just to add a crescendo to my point, we'll use the biggest indice of them all, the S&P 500, SPY. And I'll go to today's chart. And I'm actually going to reduce the intensity of this color because it's a little hard to see. Or not. Evidently that does not work. What the fuck? Okay, that's better. So all throughout today, go up and then get slammed. And just at the same time, so is XRT, or SPY actually. Go down, get slammed again, go up. Everything's good on XRT's end. Little dip, but that's clearly a spring of accumulation. Rip, and then right here. And would you look what else is red? Start to recover and recover, and I'm telling you, like, here you go. And it's not, I know it's not like, it's not that no one knows about this, but I have written an actual, I'm doing everything I can to substantiate this claim of whenever we're going down, it's because the rest of the market is going down. Now, here's why, though, or at least one of my hypotheses as to why. And also with this indicator, it doesn't mean that meme stocks are crashing the market, and it doesn't mean that meme stocks are pumping the market. It's just, it's some correlation, but as anyone with a little bit of wisdom knows, correlation does not mean causation. But the takeaway here is that one of the reasons I think why this happens is because of all of the institutional accumulation that took place back in June and late 2020, I think, on GameStop, if I recall correctly. I've talked about this before, but when institutions came in and bought a bunch of shares up, yes, you could see that as good, but those same institutions, being BlackRock, Vanguard, and Friends, and so forth, are also the primary lenders in the securities lending market, which the securities lending market is used by lendees who want to borrow to short stock they don't own because they're borrowing it. I believe that you're seeing this happen because those shares that institutions are buying up become absorbed into mutual funds and ETFs and pensions and money market funds, and this is the result. The exposure that these companies have to the broader market is now exponentially higher than it was back in January, which means that any of the movement that the broader market has, you will see a much bigger impact of that occur via exposure within the underlying. AMC is heavily weighted inside of IWM. So I'll change it to IWM. We'll go to today's trading day. And as you can see, go up and get slapped. And oh, would you look at what else is red? Begin to accumulate, get slapped. Accumulation, slap. Accumulation, start to rip and rip and rip and rip. And oh, shit. Try to recover. Recover again. It's the mosquito of doom, or the dragonfly of doom, right here. That's Kenny G. And to give a broader view, this is the 30-minute. This goes all the way back to the run that we had in late March. And we were relatively clear, right? We had this here, but we still continued. And actually, through all this red, we pummeled through, which is a sign of independence. It's a sign of organic strength. The indicators I have up here also do the same thing. They create a heat map of volume correlation. The blue means that the stock you're looking at and the benchmark share buying. The red means that they are sharing selling. A blend of them means that they're sharing both. The first one is SPY. The second one is HYG, I believe. No, it's IWM. And then the third one is HYG, which is the Junk Bond Yield ETF. So during this region right here, we had pure accumulation with no correlation to... we still had correlation, but the correlation was fading right before the rip. And now we're seeing the same thing. So I don't know. I just wanted to point that out and at least demonstrate some concrete data to these claims and why and how. And ultimately, you know, I and many other people are building a toolbox to forecast this stuff. We can see it coming. And with this indicator that I've made and all the others I've been making, there's so much you can fucking do. So I'm going to leave it at that. Thank y'all. Fuck you. And stay black.